Hey folks, good to be back. Happy Tuesday. So, a question came in about, order types. And I saw a few folks going back and forth about, entering orders and this and that. Now, some of you might be sitting in front of the screen all day, so you're just entering at the market. That's probably okay if you have training or you're part of a training group or a trading desk, and that's kind of how you all do it. I wouldn't want to fit in though. Like I would definitely go against the grain myself. I'm a tough dog to keep on the porch, which is why I work for myself. But for those of you, if you're coming out of 23 and you're kind of struggling with that, and or you have, indecision, and you can't be decisive, right? Because traders, in my opinion, have to be, they're self-appointed leaders. You have to be the chairman, chairperson, whatever, CEO and president of a company called You Incorporated. So, since we get paid to execute, how can you kind of force yourself to execute when you have reticence? And the answer to that is a stop order, right? If you have a little, some of you have an itchy trigger finger. Others can't make a decision because you're full of indecision. You're scared. You're afraid to lose money. So you overthink at exactly the wrong moment. You psych yourself out. You don't put the trade on. Sometimes it's okay because the trade would lose money, but it's really painful when you find yourself having indecision. You can't pull the trigger. You can't put the trade on. Then it goes and it makes money. Then what do you feel? You feel dejected. What do you feel? Bullied? I don't know what the feelings are. This is where you can start to look at your emotional model and say, how do you win? What do you feel in your body when you have indecision? What is that feeling? Where do you feel it? Then if you don't put the trade on and it goes and it works out, is it like, see, why does this always happen to me kind of nonsense? So where do you play that model out in other areas of your life? Because I just had a chat with somebody who had written and, they had wanted to trade and get into stuff. And we figured out that after 2 years of kind of hemming and hawing, the person really wasn't cut out for trading because they couldn't bring themselves to put a damn trade on. They had a big curiosity about the market. They had an interest in math and financials. They liked patterns. They did crossword puzzles. So they had all that going on. But when it really came down to managing the risk, they didn't have the emotional constitution to do it. So I feel like I did them a big favor and saved them, who knows, thousands to tens of thousands of dollars, in as much that they couldn't really pull the trigger. So it was a great curiosity to watch the market. But, again, we get paid for taking on risk because where there's risk, there's typically some type of reward. Hopefully, it's very asymmetric, like some type of, at least financially speaking, 3-to-1, 5-to-1, that type of a payoff. But you have to understand too that there's the emotional payoff. And sometimes the emotional payoff could be the thing that's actually prompting you to do something or stopping you from doing what you should do, right? What we call misfeasance. So you don't want to find yourself doing things that you shouldn't be doing, and you don't want to find yourself not doing the things that you should. And in my opinion, those things should be using stop orders because it's forced objectivity in the sense that if you're looking at the chart and you're seeing that the name is trading between support and resistance, in my way of doing things, there is no trade there, right? Even if you're in an uptrend. So if you know that you want to participate in the upside, knowing that you don't want to participate when it's in a trading range, even if it's in an uptrend, right? You can easily put a buy stop order above the market, which will trigger and force the trade long, right? You just have to get the inner strength to put that order in. You don't have to sit there and do anything at the market. You can see where if the market's trading 2021 or whatever it might be, you can put your order in, above 21 and sit and wait. In fact, you don't even have to look at the screen. And so I do get a lot of comments and like, man, I saw this trade from a mile away to my gut feeling told me this, but the result was I didn't pull the trigger. So you have to ask yourself, why aren't you pulling the trigger? What is it that's happening for you emotionally, right? Because tactically you know how to do it. Putting an order in on your screen is no different than filling in the fields of an email. Who is it going to? What's the subject? What's the body? Hit send. It's basically the same thing. So I don't typically want to use limits because that typically infers that you have a price target. And to be all, respectful to who you are, I don't feel like you're smart enough to know what the price target is. You can have a hunch. You might say, okay, I'm buying it here. Here's where it topped out before. So when it tops out there, it certainly can't go through that. So I'm going to try to sell if we get to that neighborhood. That's not my style. I never want to take small winners off. I want to let them grow, even at the risk of losing, you know, those small unrealized gains. It's not worth it for me. It might be worth it to you again if you have a smaller account, because again, you want the validation, you want the emotional reward that you could book a winner. I get it. Once in a million times, the market will gap, overnight or over the weekend. It doesn't happen frequently, but it can. So you got to figure, like I said, it happened 2 or 3 times over the last decade. It's not something that really happens. And when it does happen, and if you're in something that's strongly trending, you find out that the gaps actually are happening in your favor, right? Now, there's also trading in the morning before the 9:30 opening bell, so to speak. So there are opportunities to manage your risk there. I wouldn't myself, if you don't have any training, be a big participant in those markets because they're kind of illiquid. But test the waters. All you can do is try. I guess the thing that I'm saying here, though, is that for where you might be in your career, and even if you're a seasoned pro who's just a little head shy because you came out of Q4 having lost some money, that's now in the past. And there's really nothing in that can affect things going forward. All you can do is, I made friends with a guy named Ken Ravizza, who was the mental baseball coach for the Chicago Cubs at one point, and perhaps a few other teams. My boys were very competitive baseball players growing up. So we'd work on the mental game of it, right? Because just like trading, just like jiu-jitsu, it's a game of failure. So how do you go, if you're hitting 300-400, you're doing really, really well. But that can weigh on you emotionally if you don't like the feeling of failure. And so, he and I got into chatting. I wouldn't say we were buddies, but we knew each other. He's since passed away, rest his soul. And he would look at my sons and say, look, what's the best thing that you can do? You can put your best swing on a pitch. That's it. That's all you can control. Where it goes, whether you hit it or not, whether you pop it up or not, whether you ground out into a fielder's choice, or whether you find a gap. It's just you have to think that you're going to have a couple hundred at bats, right? And so half the time, like if you can put the ball in play and make solid contact, good things happen. Put the ball in play, move runners, right? Control the controllables. So I'll look at you and say the same thing. What's the one thing that you can control? You look at your charts the night before. You know where the ranges are, the levels are, and you put your orders in accordingly. There's nothing really to think about. You're not trained to sit there and think about stuff on the fly. And if you think you are, in all due respect, it takes years and years and years to get there. Now, look, if you're 10 years a prop trader, tell me to shut up. But if you're newer to the business, you're nowhere near being in that neighborhood of being able to sit there and kind of figure things out on the fly. That to me is a big mistake that newer traders make all the time, is think that they can look at tick data or 1-minute bars and kind of infer where things are going to go. It's far better for me, if you want success and if you want it quickly, is to know what your levels are the night before. Worst case, the morning of. I feel not prepared if I'm doing it in the morning, and then have those orders ready to go. There's really not a lot to think about. In fact, if you're not trained, overthinking at the exact wrong moment is probably robbing you of the opportunity because you're afraid, you're in fear. You think you want the win, but if you can't pull the trigger, you're kind of stuck, you see? So one way to alleviate that is to think in terms of putting your buy stops in above the market and let them sit there. If they get filled, great, you didn't chase. Or you didn't try to buy on some kind of pullback thinking that lower prices mean more value. They don't, right? You're not a CFA, and even I teach CFAs. And although it's a very hard 3-part exam, no one can predict any better than anybody else. Humans are very bad at that. So education, that's not going to help you in many. It helps you understand things. It doesn't help you trade any better. So it's what I'm trying to do and bring value on the channel, is to help you understand that there's some myths out there that somehow if you're looking at things in 1-minute bars that you're more in control. I don't know. If I'm looking at 1-minute bars or daily charts and I buy something at 22, what's the most I could lose? 100%. I don't think seeing things in 1 minute bars, which is super random data, is going to help me predict the future. Um, in fact, to the untrained eye, it's more than likely to induce you to do something stupid, like get into a trade that you don't have any business getting into, or two, this is the thing that actually kills more traders than not, is sitting there taking small $50 gains. Now, this happens to the folks who are trading the micros, right? Because it's a $2 per point move. So you catch 50 points, you're like, I just made $100. Boom, let me take my gains. I'm like, go work at Starbucks. You'll make more money and you'll hopefully get benefits. Maybe you'll get free breakfast and lunch too. Like, you can't sit there and try to figure this stuff out on the fly, especially looking at your P&L and 1 minute bars, thinking like that's how you're going to trade your way to financial freedom. It's something that you ought to make up in your mind. Like, I tried doing that all of 22, all of it during 23. Now's the time to make that change. Do yourself that favor. Put your orders in, let the market come to you. If they get filled, great, adjust and enter your protective stops. If you don't get filled, perfect. You didn't chase, you didn't buy something that was wishy-washy or in a trading range. Come back and do the same thing tomorrow. But the key is intentions equal results, right? So you have to put in your orders because in order to make money, you have to have the risk, the financial risk, and you need to have the emotional risk. Unfortunately, there's no way around it. Now, over time, you can lessen the effect of the emotional impact of it because your skin will thicken with experience in any industry, right? Not just trading. So what I would do is sit there and say, I'm gonna look at a few instruments. I'm gonna put my stops in. If the market comes to me, great. If not, good. It means I didn't chase, right? You don't want to be executing at the market. Wait for your levels to get hit. And if they get filled, great. If not, come back tomorrow into the same orders. Or sometimes the things fall apart and the markets roll over, right? Look what happened to, NVIDIA again. It can't, at least from where I'm sitting right here today recording this, it hasn't, it can't take out 500. So I don't want to try to cheat because if I'm at 475, to me, how much could you lose? All your money, right? So it still could go 450, and I don't want to go long at 475 to 500 via 450. You see what I'm saying? You can figure out what kind of drawdown you want to withstand and represent that, of course, in your position sizing, which is kind of where we make and lose. But the entries and the exits are secondary in my opinion. You make your money with your position sizing, and then therefore you're comfortable with your position size. Furthermore, you're able to enter your buy stops and or your sell stops, right? Buy stops you can use to enter the market long. Sell stops you could use to both protect your cash and stop out as a protective stop, or you can place sell stops below the market to enter the market short and add risk that way. But that's my 2 cents on it. Obviously, you can go on and on and on about these things, but I wouldn't be looking at 1 minute bars intraday, sitting in front of the screen trying to make $100. I'd put my stops in, walk away from the screen, go do something productive, make money, right? And if my orders get filled, well, then that's great. So you could technically kind of have like 2 days going at the same time. You can have your trading day going where the stops are kind of minding the market for you. There's no point in sitting there watching it, and then do something productive that might be able to, make money, do your side hustle or this and that, so that you can further endow your account. Anyway, if you have more on it, shoot over your comments. I don't need any instruction on it, but if you have a question about how to better optimize what you're already doing, then by all means, I'm all ears. Happy to help you. Thanks very much for being here, folks. I'll see you.